everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading, tomorrow being the 13th of the month. The main objective for the video and the trade plan as a whole is to create an approach that we can go into tomorrow's trading with, a guideline, a plan, so we aren't really taken by surprise, although the markets lately have been a little bit surprising. Now today, well, fingers crossed you brought your caffeine, because it certainly was a slow market today, and with that slowdown, there really wasn't a whole lot to work with. Again, it was another one of those types of days that had an okay movement, but it didn't accomplish a whole lot. But before we get into the charts and all the fun stuff, make sure to swing on over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's going to make sure that you're signed up on our email list so that you never miss any of the newsletters that comes out. That's going to cover this video along with a bunch of other things, different announcements and cryptocurrencies, futures, stocks, options, you name it. If it moves, it's probably going to be in there at some point. So it's a great newsletter to get your hands on if you haven't done so already. Now, along with that, if you haven't done so already, make sure to click on the live trade room subscription and trial info, where you can sign up for a 3-day trial with us in the live trade room. That's going to let you sit in the room with us for 3 days. You'll be able to see our screens, you'll be able to see the trades that we're looking at taking, basically everything. It's a great way to kind of hang out with us for a few days and see how it fits into what you're looking for, or, you know, you can bounce some questions off. It's just a great environment to be in. So if you haven't done so already, make sure to sign up for that 3-day trial. And if you join as a full-fledged VIP member, don't forget to check out some of the discounts on that, by the way. You get the live trade room as part of the package, so you never have to worry about spending anything ever again. Now, taking a look at the markets for today, we have the euro, which, and this is going to be a common story for most of the markets, isn't accomplishing a whole lot. We had a open right here, and we're going to be closing right here. It is going to be a bullish day overall, but with a lot of wick on the highs, a lot of wick on the lows, just a little bit of a choppy, sloppy day. With that back and forth that we've seen, we are really just kind of transitioning from almost not necessarily ranges. There are a bunch of small ranges inside of here, but it almost feels more like value areas. Think back to like market profile of old, right? Market profile kind of shows areas of interest in terms of value areas, buying cheap, you know, selling high, that kind of thing. And that's kind of what it feels like. The market sort of found a little bit of a balance down here, and that seemed to have some value, pushed the market up. And when it lost its value, everybody got out and caused the market to drop down. And it quickly ran to the other side, where it once again found value, and then it rocketed back up. And there's just a lot of that back and forth sort of movement. Now, as a whole, we could wrap this up as one big range. The highs fit best at around 19,800, lows at around 19,320. We can definitely feel that sort of valuation coming into play. Now, zooming out a little bit here, we can see that this low dip really kind of just retested some earlier levels of support or resistance inside this range back on the 6th of September, and we had a little bit of a hard time around the highs of that range. If we draw that range all the way across, we can see that that level was no joke, and when they finally broke down, it quickly snapped right back up again, and now they're using it as support again. So that 19,570 area, that range high from back on the 6th and even before then, is a pretty decent area of interest. Now, this does kind of look like a head and shoulders here, but it's not the most pronounced thing in the world, and we are still in an overall downtrend. But with the range that we're stuck in right now, I would rather wait for the extremes to be tested until I start putting anything on the table. And one thing that does stand out is that quick dip lower that we had that went back into that value of from the 6th of September. We quickly ran out of there, and that created somewhat of a twin reversal, where we have a big move down, a big move up, and just a little bit of distance spacing in between. And very frequently, the market doesn't like coming back very far into those. A lot of times you'll see a big move down, a pause, a big move up, and then you'll see something like a little half pullback to try to find some trapping areas from earlier, maybe earlier areas of support or resistance. Cough, cough, right there, right? We have a nice swing high, a double bottom low, looks like a pretty juicy area. So anywhere between, honestly, 19,560 down to 19,450 are areas of interest for buyers to try to jump in and shove the market back up towards those new highs on this massive failure down here. So I am leaning on the long side on the bigger picture, even though in kind of the medium time frame we are in a bear trend. In the bigger picture we are still bullish, so I am looking to kind of play this as a range, but with a slight emphasis on the buy side. Over on gold, we have a pretty decent move overall. Not a ton really accomplished. Again, not a big surprise. We're opening up here. Now, this daily candle is going to look a heck of a lot better than a lot of the other ones. Small wick on the highs and a good wick on the bottom, showing failure on the daily chart. And the intraday chart, though, you can see from really midnight until... man, it really didn't start breaking out until 2 o'clock, and even then it wasn't that impressive. We had most of the day, if not all of the day, just range-bound, choppy, sloppy, and gross. We didn't start getting this breakout movement until the kind of earlier afternoon session going into the late afternoon session where we are standing now. And at this point in time, we're forming a little bit of a wedge up here. We have an ascending wedge at the top after the breakout. And looking at this, another kind of situation where we have sort of a value area being put in. We have the lows coming in down here, and those look pretty good. 1326.7 to 1327.7, that's that 10-tick range. And then above that, we kind of have that same thing on the highs between 33.5 and 32.3. And if we zoom out, really, this is the first time that we've been this low for quite a while, since really the 1st of September. And we dip back down to that earlier area of interest. Notice that we chopped around the same location before, and then we ran away from it. So the fact that we are now showing, well, we're in the same location, we're starting to round off the bottom, this looks like it may be the attempt to try to get that weekend gap filled. We're still not losing sight of that at 1351. That is the weekend gap fill. And now I'm not expecting that to fill tomorrow, but with that amount of bullishness and they're trying to round out the bottom to get that bull rally going, it may be a couple days of bullishness ahead of us here if this wants to continue. One big level that we want to keep our eyes on is that first candle of the week, that monster 5-minute bar, or really the first 10 minutes, because the second candle formed a little bit of a wick top. But that zone is going to be a battleground. They're going to be fighting around those highs and those lows for a while. If they can start breaking through them, then it should be all systems go to fill that weekend gap, but we do have a couple things in our way, so just make sure to keep that in mind. What I'm looking for really on gold is for continuation to the upside, buying a dip. That dip could be as early as 1334. I wouldn't even mind seeing them pull back into this earlier area of interest, 33.5 to 32.3, maybe even monthly support at 31.9 to find some bouncing to shove the market up from there. Again, just trying to buy as cheap as possible before we go buying the highs here on a gold rally. On crude oil, we do have the API numbers just coming out, and that is causing a little bit of a spike here. But overall, another day where not a whole lot has been accomplished. Now, this API report can definitely throw things around, but we have the open, and before the API report, the close was right there. We're not really getting a whole lot. We can see, if we were looking at the body closes, there's a little bit of a wedge forming here and a little bit of a wedge forming there, but that's really about all we have to work with. Another situation where we have value areas as zones more than we have static levels of support or resistance. And those zone lows on the buy side are going to be 47.86 down to 75. On the high side, 48.31 to 41. And if we zoom out, we can see that this is still that same area we've been talking about for a while. We had that quick dip lower that came into the earlier trapping zones from quite a bit before. If we take a look at 47 and go back in time a little here, we can see that that was swing highs for quite a while, swing lows for quite a while, swing highs, lots of choppy sloppy around there. And now that we're running away from it, we're looking like they may want to try to continue that bull trend and try to take back some of this bearish tone. We've already completely nullified the at least a good half of that drop lower. Now it's time to see if they want to follow through and get the rest of it. The one thing of concern that I do have is a lot of times when you have this big drop lower, a quick snap and a failure, they love coming back to that previous swing low before the snap down. And that may mean that we could have another spike down, maybe on the inventories, maybe not until next week, but that is something that is kind of lingering in the back of my head where it looks good to the upside, but we may have another leg down left in this move. Aside from that, though, we do have a very large, just a bigger wedge working its way higher. Everything is looking really good to the upside. The API report obviously helping that along, but what I would really like to do is look to buy a pullback as cheap as possible. Again, we don't want to buy the highs of a move, not when it's this choppy. So I'm looking for support for buying at around 47.86 down to 75, and, well, maybe the inventories are what we're going to need to get the market back down there. And then finally on the S&P just grinding its way higher again, pushing into record highs. We have the NASDAQ pushing into all of the index markets just rocketing to the upside from yesterday, continuing into today. Everything is looking nice and strong. Now, we aren't as strong as yesterday, of course. Yesterday was a big bull market. Today, a little bit more rangy, a little bit more grindy, but overall, the emphasis stays the same. We are bullish, so we're looking to buy pullbacks. Now, these swings are getting pretty big, right? We're not seeing the swing low to the swing high and then a shallow swing low and then a bigger swing high. We're not getting that anymore. We're getting double bottoms. We're getting traps below lows. We're starting to transition a little bit into a potential range. So because of that, we have to be a little bit careful buying too aggressively on the high side because it looks like we're kind of running out of steam. So because of that, what I'm looking for is a dip below 91.25 for a possible trap, just like we had back here, maybe even a little bit further. It might be a point underneath that, maybe a couple points underneath that. But either way, 91.25 and lower is going to be the buy area for one more attempt back at the highs, and that may just even us out for the potential range. It does look pretty obvious already that they're trying to get a range in. Now it's just a matter of proving where those levels happen to be. So overall, again, looking for the bull side, but you know, depending on where they want to come in and how they want to play it, we may have to be a little bit cautious and buy as cheaply as possible so don't get stuck on the wrong end of things. So that's going to do it for the outlook for the futures markets. Now, if you are waiting for the cryptocurrency side of things, don't worry, that'll be next on the list. The news for tomorrow, we do have some news. At 8:30 tomorrow in the morning session, we have the PPI for August. The forecast for that is going to be 0.3%. The previous was negative 0.1%. Looking at crude oil inventories as well, the inventory forecast for this time around for tomorrow is going to be 3.238 million. The previous was a build of 4.580 million. So we're forecasting a little bit of a bullish number. Now, when we get the API numbers, once those are kind of fully built in, we'll be able to get a little bit of a better clue in terms of what's going on. But from there, everything else is pretty straightforward. So jumping on over to the crypto side of things, a little bit of a tumble today on the cryptos. We had the boss, if you will, of JP Morgan, the CEO, Jamie Dimon, saying that Bitcoin is a fraud and that it will eventually blow up. Now, I'm not going to get too much into the conspiracy things, but I find it kind of funny that the CEO of JP Morgan is talking about Bitcoin. Is someone a little jealous? Maybe. Overall, though, that news has pushed the market down just a little bit of a dip lower on Bitcoin on that news, but still having a hard time breaking through 4,000. It came close. Those lows, if we look, the low is exactly 4,000 to the penny. So buyers obviously still looking at that 4,000 mark and buying pretty aggressively off of there, and I still view this as on sale anywhere underneath 4,000. Now, it didn't technically get underneath 4,000. It stopped directly on top of it, but if we can get another dip lower, I would love to find some buying pressure around that 3,900 for a potential bounce back up. Over on Bitcoin Cash, relatively unaffected, still very sideways. We're still seeing a lot of wicks on the bottom. Every time the market makes a quick run down, it's snapped right back up again, showing that the buyers are buying the lows, and I'm sure they loved getting this one if they were around with limit orders. But that's really about it. Bitcoin Cash isn't giving us a ton to work with for right now. I would still love to see that dip down to that 0.11 even at this rate, but for the most part, we're not really moving, so there's not a whole lot that we can do on good old BCC. Looking on Ethereum did catch a little bit of a dip as well on that news, but for the most part, we're still floating around sale territory. 65 is the big sale price that I'm looking for, but for the most part, we're cycling off the 200. We're still in a bear trend. We are likely going to test the lows one more time before we start really seeing the buyers come into play. I'm looking for a low test, probably at a probability rate of 60% or so for the market to drive lower and complete that one last time. And then from there, turning back up towards those highs, maybe we can push back to that $400 mark. But until we get that dip low, I think a lot of buyers are going to be on the sidelines waiting for those better prices. On Litecoin, a little bit of a dip there as well, but for the most part, still in sale territory. We have the wedge. That hasn't even broken down. Everything is looking very, very straightforward. I would love, love, love a trap below Litecoin on 0.0155. I think that would be a phenomenal area for potential longing, especially if you can get a dip down to 15. That would be even better. I think a lot of buyers are waiting. They're not really wanting to buy right now, but they're not really wanting to sell either because we're not catching that much of a lift. That means that we're just kind of stuck waiting for a little more follow through on one side or the other. So for right now, just like all the other ones, we're waiting and sitting on hands a little bit. Zcash looking for a dip lower as well, looking good for that 0.049 would be a relatively nice area if we can get it, right? If we can get it down to those lows once again. Just a huge amount of support coming in at around 48 and lower, and that seems to be the area of interest for buyers to jump on the table. If we switch over to Burst, Burst is catching a little bit of a pullback, mostly, again, at the same time that news from Diamond came out, caused a little bit of a dip on everything. Burst coin did take a little hit there as well, back down underneath the 300 mark. I would love to see a dip down to 239, 240s. Seems to be a big area of support. That's where the market has built a little bit of a floor, and a retest of that zone, especially knowing that they flat bottom candled for a good 20-30 minutes at that price before, there could very likely be a huge buyer that is waiting there trying to prop the market up. Either way, a dip down to 240 would be very welcomed. I would love to see some buying pressure off of those lows. And then on Dashcoin, seeing a little bit more of that continuation lift to the upside. We're getting a little bit of an attempted breakout here. We have that wedge that was forming. They're trying to break out of it. We can see they broke out a little bit, held it as support, and bounced back up. But is that enough to really flip the buyers on their heads and send them flying to the sky? Probably not. What I would rather see here is a little bit more follow through like we're getting right now, and then a dip back down to retest that kill zone, right? Retest the kill zone and then get a bounce out of there would be a lot better. That'd be around 75 if we can get that bounce to the upside. And then finally, one more on the table. This one is one that we haven't looked at before. EGC, that is going to be Evergreen Coin, has an absolute rocket ship of a move to the upside. Really what I want to see here is a dip back down. I think we're a little bit pricey at the moment, sitting around that 8,000 mark. But what I am looking for is a dip back down to where they found a floor before at around 56.82 for potential buying pressure back up once again off of there. Now, by the time it gets there, we may even have the moving averages coming into play. But for the most part, I think we are a little bit too expensive for my taste right now. But if we can get a dip down to that 56.80, 5700 area, it might not be too bad for a potential buy going into tomorrow if they give it to us. So that's going to do it overall for all of the outlooks. A little bit of a choppy, sloppy market. We've got some news coming out on Bitcoin causing the market to catch a little bit of a hit. Again, not to sound too conspiracy theoristic, but yeah, that seems a little bit interesting how the big first name to show up on this is the CEO of JP Morgan. Makes me scratch my chin a little bit. Overall, though, everything is looking pretty solid. Fingers crossed we get a little bit better price action tomorrow in the futures market. But like we always say, doesn't matter what market you're approaching. Make a plan, trade a plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.